You're muted, Ben.
Welcome back, everybody. So we are here to go through everything around, well, one, why there might be a massive inflow into crypto. And we've seen this in the stock market around 2013. So AJ is going to be covering that off first. And then I want to talk a little bit about the whole Tether situation. You know, there are lots of shorts. We're going to find out if that will have an effect and whether we should trust what Tether are saying. And finally, wrap up just on a little bit of news about Celsius. AJ, should we jump in straight away and kind of have a look at some of the news that we're seeing with regards to Binance?
Yeah. So let me just put it up on my screen. So this was released a few days ago. Let me just get rid of this quick. So this was posted a few days ago. And this is saying that Binance US cuts spot Bitcoin trading fees and sparked what may be the beginning of a long-awaited fee war in crypto. I'm just going to read some stuff off my phone. I have a few numbers here to sort of talk about, and I want to make sure I get them right. So, as we know, Binance is the biggest crypto company in the world, who I'm sure you've all heard of. But if you haven't heard of them before, let me give you some context. So last year, in 2021, there was 7.7 trillion worth of value exchanged on their platform. So not million, not billion, but trillion, and 7.7 trillion of that. And that's a lot of money, and that amount of money, represents about 30% of all crypto activity in the whole world. And in fact, in the last 24 hours alone, there have been, if I just pull this up right here, there have been around over 11 billion dollars, volume traded, and the second closest is actually FTX with 1.6 billion dollars traded in the past 24 hours, and that is almost 7 times less as Binance. So you can see that Binance is huge. And just a few days ago, they announced, like I just showed you here, they announced that. Let me just pull it up again. So a few days ago, they announced they're dropping the fees to zero for Bitcoin spot trading. And what this means is, as long as you are on the platform trading Bitcoin using US dollars, USDC, Tether, or BUSD, you will now not have to pay any fees. And I'm sure you can agree with me here, Ben. But this is sort of equivalent to what happened with Robinhood when they revolutionized the stock market way back in 2013 with the commission-free structure, allowing people to not have to pay the pesky $10 fees that the average person, so that the average person can start investing, because paying $10 on, say, a $100 investment is already a
10% drop,
10% instantly before you're even actually seen the market move. But what does this mean for crypto, and is it bullish? For me, the answer to that is yes, but not instantly bullish. This zero fee war has only just started and only just begun with Binance, and is most likely going to sort of be a domino effect across across all exchanges, because for them to compete with Binance and keep up with Binance, they need to offer zero fees as well. So yes, I think this is bullish, and I think it's going to take. I do think it's going to take some time though for the other exchanges to sort of catch up with Binance. But ultimately, the main point here is that having zero fees is going to attract more users. And that's exactly what happened in 2013 with Robinhood when they offered zero fees in the stock market. And let me just show you on my screen here. So this is just a chart that shows us the US stock ownership. Now, the all-time high was at 63% back in 2004. Ever since then, we have seen a pretty substantial, well, not a substantial, well, we've seen a decline in, the percentage all the way down to 2013. Now, this lines up perfectly with, what Robinhood did by
revolutionizing. It's a tough one, isn't it?
Yeah, the stock market, by offering those zero fees.
Commission trades.
Now, zero commission fees. Now, this was back in 2013 when the percentage of stock ownership in the US was at the lowest, at 52%. But when Robinhood released this, we actually saw the percentage actually increase. So 2014, 54, 2015, 55, and then 2016 we went back down to 52. But this is when all the other companies were sort of we saw that domino effect, and all the other companies were also offering those zero fee commission, and we saw. We've seen an increase over the past, few years, and right now we are sat at 58%. So it's only a 6% increase from 2013 when we did get this zero fee commission. But ultimately, what this tells us is that zero fees in a market, it does bring and attract new people to the market, and this is why 100%. I think this is going to be, bullish for the crypto market. Once we start seeing more exchanges offer zero fees, and we see more people. I think we're going to see a lot more people attracted to crypto. So ultimately, for me, this is bullish. I don't know what your take is on that.
Yeah, I mean, look, my take is that even we all know during 2020, that was where we had a lot of, people were printing money, people were being given printed money. This then led to a lot of retail traders. The amount of retail traders increased dramatically. And what's the first platform they went to is because they're all new traders. They want to try it for free. They want to have something that's quite engaging. And this is why Robinhood really won that war during 2020 and into 2021 as well, was that they had a free product, and also it was super engaging, very gamified. And I think that then helped them appeal to the younger investors. Now, obviously Robinhood is deal with stocks, but I want to add on to this as well, in that, Binance is obviously in crypto. They might get into stocks, not actually individual stocks, but we can get into that later. But they might offer stocks just in the same way that FTX, are planning to. But one thing to consider here is that stocks can have a stock split. So people are worried about buying into a stock because one stock is $2,000, $3,000, $4,000. That's too expensive. People might be, like, oh, okay, well, actually Bitcoin's 30,000, 50,000. I don't have that money. Now, Bitcoin won't do a stock split, but I think one of the kind of lowering those barriers to entry for the retail investors, I think is going to be having those free trades, and making it just look as easy as possible. And also, if someone was on Robinhood, make it look as similar to Robinhood, appeal to them with something they're already familiar with. That I think could be very good for the space.
Yeah, definitely. I think there's a lot of people out there that think crypto is very confusing, and I guess if you go into it, then yes, it can be quite confusing with sort of all these wallets and stuff. But ultimately, I think if it's made simpler for them and more attractive, as with the zero fees, then I think it's going to attract a lot more people.
Yeah, and like you said, it's also going to give people an edge, or give Binance an edge. So FTX will do it, and then we'll see, KuCoin, we'll see Huobi, Femex, whoever. But just to kind of, obviously we wanted to touch on that, and that's what I think is going to bring a lot of people into this space. It's not going to be an immediate effect, but it will be very good for Binance, especially when all of the other exchanges, mostly, not FTX, I will say, because FTX are kind of looking at acquiring new exchanges, very strategic at this point, talks about them even buying out Robinhood. But, this is what Binance are doing, while all of the rest of the exchanges are cutting the amount of staff, what they offer. Coinbase Pro, are they going to get rid of that? So this is a very, kind of strategical thing. Now, just to give you a bit of the climate as to where we are at. So today, stocks are up as China cuts its quarantine. So just to go through, China softened its strict COVID protocols. This then gives travel a bit of, shall we say, it opens up the world for travel because obviously there's a lot of people in China and a lot of people like to travel to China for business because there's a lot of business that's done there. One of the main businesses that is done there is construction. So iron ore and copper reversed their losses, so i.e. gaining, and also oil then gained amid risk of supply disruptions. Now, supply disruptions are going to be one part of it. Yes, there's worried about Russia, but there's also now, if China are opening up, and they're relaxing that zero COVID policy, more of the Chinese guys will be back in work in, making, I don't know, anything from toys to cars to electrical equipment. And so this is going to, really need commodities so that they can actually make the stuff. So this is one thing we are going to see, I think, a slightly getting the economies globally back to normal. On the European side of things, ECB will activate the bond purchasing firepower. It's earmarked as a first line of defense against a possible debt market crisis on Friday. And also in the US, we're looking at earnings revisions. So this is one thing where I think we're going to keep seeing the economy, maybe not the economy, but the stock market, and this will weigh on the crypto market, down for a couple of months. Because as we go into the next earnings season, companies still think they're going to be earning this much because, they've been earning such a crazy amount because there's so much money. Now that people are reducing that spending, I think a lot of companies are going to miss their earnings expectations, and that will weigh down on the general markets. And obviously, if it happens in tech, it's going to happen in Bitcoin as well. So that's what I think we should look out for the next few months. I'm going to jump straight into Tether. So AJ, did you hear about this? Where, according to the Wall Street Journal, loads of hedge funds have been shorting Tether USDT as much as possible.
Okay.
It's been pretty crazy.
Yeah.
Pretty crazy.
They were having a slight Tether, okay.
Yeah. So USDT. Now, the article cites that Genesis Global head of institutional sales, so this guy, he said there's been a real spike in the interest from traditional hedge funds who are taking a look at Tether and looking to short it. And this is because everyone's worried about UST. Now, the CTO of Tether had to come out and obviously say something. You have to address FUD. If it is FUD. So he obviously mentions Terra Luna collapse, just saying it's a coordinated attack, FUD, troll armies, clowns, etc. Now, this is kind of how they did it. So there's enough pressure in the billions causing tons of outflow. Now, there has been, actually, I don't have, let me go on TradingView.
Well, I've got it up on my screen here if you want to look at
throw that up, USDT. Let's see how much that's dropped.
There you go. Well, I'm just looking at this massive wick down here.
Yeah. So no, that was on the 16th of this month. But looking kind of closer, you see that there's a little bit of pressure. These slowly bits of pressure that I will say there's. Let me show you something. So it's looking okay, but it's not as stable at the moment. I think this was earlier this month when everything was kind of dropping. We hit all-time lows, and this is where we had a lot of the Celsius worry and the depegging of Ethereum.
Yeah.
So let me bring back up the Tether article. And you guys, obviously, you can look through, if you go through Twitter, find the full response from Paolo. He's the CTO, I should say. So it's only 12 little points, but I want to go through and kind of give you the overview. So he basically said hedge funds they're kind of responsible for the allegations that Tether is just built on lies. Now, I don't think that Tether is built on lies. Now, one of the reasons, or I should say, I don't think that they are fully transparent. I've always had a bit of a worry. So, Tether is in fact 100% of the backing, never failed a redemption, and all USDT are redeemable at $1. Now, yes, this might be true now, but let's look through their transparency. These are the past reports. Now, they have never, ever been audited. Now, an audit is very different. These guys go through and explain it quite well, and this is why I wanted to show it. Here we go. Where's the audit? Was it on here? Audit. No, basically an audit is look at your whole company, look at everything, and that's over like a long period of time, as opposed to just a report, which all of these are reports based on one day. Now, there's a lot of talk about, a couple of years ago, when one of these reports came out, that there was 250 million that got moved into their account and then moved straight out afterwards, the day after the report happened. But they have come out. I don't think that Tether are as transparent as they like to say. Here it might be where we say, okay, going to see, basically they're still getting their reports done. This is by HMA Cayman, but they're also in trouble. They're being investigated in the UK by, what was it? So under investigation by the UK Financial Reporting Council, the accounting regulator, according to a report published 7th of January. So they haven't chosen the best guys. And to be fair, I've never heard of these. Why don't they use one of the big, major accounting firms? They haven't really done that. And so looking through here, it's promised to produce an audit as early as 2017, but it still has not produced one, but still has only released an attestation. Audits provide a full look at the company's financials over a period of time, while attestations, which are these little reports, are snapshots of a company's balance sheet on a specific date, which you could borrow money, put it in, say we've got loads of money, and then obviously you take it out because you take a loan or something like this. It's not a full audit. And under the title of transparency, they haven't been very transparent. I'd like to see a different company come in here. I'd like to see a full, actual audit, but I just don't see that happening. And here are some of the reports if you want to kind of have a look.
What would be your go-to stablecoin?
I'm always USDC.
Yeah. I think the same.
I'm bit, Circle, big fan of Circle. Very happy with those. I guess another one of the reasons at the reporting date, Tether Holding Limited was the defendant, so people going against them in 2 ongoing legal cases, the outcome of which cannot yet be reasonably reliably estimated by management, and no provision was recognized by management. So if they lose, are they gonna have to pay loads of money? Is your money safe? This little audit, it does look good on the surface, but if they have to pay that money over a long period of time, as opposed to these little snapshots of their bank balance, are they able to pay that? And that's something that I don't know. But here, if you look through, this is an older one from Moore, which was down here, I think. So you can obviously go through this, have a look. It's on the USDT website, tether.to. What about you, AJ? How do you feel about, in light of these bits of news of, around whether Tether is actually transparent or not?
Yeah, I think it's really hard to sort of judge it, but as I said, USDC is sort of my go-to. But if this stuff is floating around, it does just put a bit of sort of fear in me for USDT, and sort of I'll beg the question: is it safe to hold your money in there? I know for our portfolios we do have some UST holdings still, but for my personal holdings, I just tend to stick to USDC.
Yeah, I'm the same. And look, guys, we're not in any way affiliated with USDC, and there's not anything majorly against USDT. If I go like coin market cap, we can see if we go to Tether. Obviously, it's third largest. It's very big. I think it does have enough. But if we go, I want to go. No, actually, no, I'll go all time. I want the market cap here. So this is just where I think it's very crazy. Is the market cap went kind of from here, very exponentially grew. So that's a 3x growing in such a short amount of time. What was that? It's about 4 months. So 4 months, it kind of grew 3 times in market cap. And I just don't know that because of all of the FUD that they've just been able to make sure that they've had a full amount of backing the whole way. And this is kind of what you're seeing here. Yes, there's a general kind of market sell-off in crypto, but obviously people are selling their USDT, and it could be because they're worried. And I'm just going to wrap up here, guys. The Celsius story continues. If you are involved in Celsius, you can now, they've given you an extra feature. You can't withdraw your money, but you have an extra feature. You can show support by engaging hodl mode in the Celsius account. So this has all come because Celsius seeks a show of client support as their own lawyers push for Chapter 11 bankruptcy. Get a load of this, AJ. Lawyers hired by crypto lender Celsius are advocating for Chapter 11 bankruptcy, according to People. But executives at the firm believe many of its clients would prefer Celsius to avoid lengthy and painful bankruptcy proceedings. Yes, that is true, because you're going to hold on to their money for much longer. And we all know, we've all read your risk determination or disclosure, something like this, where you say, if we cannot pay the people who we owe, we will take your money to pay them. So I don't believe that the executives are correct. I don't think they've actually been on Twitter and realized how many people are so angry at them. But yeah, its own lawyers have filed for a chapter, or want to file for Chapter 11 bankruptcy. Maybe bankruptcy is not a bad thing. Declare yourself bankrupt and have someone buy all the assets. That could then mean that people who have the assets are in fact still in the crypto market. That I think would probably be good.
Yeah.
AJ, what would you be doing if you had some money still locked away in Celsius?
Are withdrawals still open?
I believe so. Yeah, I know that a lot of the crypto lenders have halted the amount to which you can withdraw, but I think from what I last heard, Celsius, it is still totally blocked. If anybody has an answer to that, drop it in a comment.
Yeah, if I had a lot of money in there, I would pull it out. I don't have anything in there, but it depends how much I would have in there. If it's something that I'm not worried about losing anymore because I've lost so much on it already, then I'll probably just leave it in there. But if there was
it's like the little Luna positions that people still have. I think I've still got some Luna. I mean, I don't know how much it was, but it's just it's like a tiny amount. When I pulled out, I ended up losing out on $100 that I still had locked in there.
Yeah.
But that's obviously, now I see that as it's not in my portfolio. I mean, it only represents less than a penny. So
yeah, I've got less than $100 in there, and I'm just, is it worth losing? Is it worth me taking that money out?
It was like $100 or so, kind of before it crashed.
Yeah.
And then obviously it crashed, and now it's worth nothing. So I see what you mean. I would probably treat Celsius the same, where they lock your funds. They've made it very clear that you can't, that you're probably not going to get your money back. And now they're saying, "Oh no, please hodl with us." Yeah. I'm like, that's good for you, but not for anyone else. But just to wrap up, then, on also this, should we say, lending platforms? This was Fatman Terra, very very good bit of a good find here. So incredible. A centralized yield service, very similar to Celsius, hence why I'm bringing it up here. CoinFlex gave a $47 million uncollateralized loan to someone who can't pay it right now. Now, what they would do is usually they would be like, right, okay, how about we just take the liquidation, to take the liquidation, okay, we've messed up here. We gave someone a loan. We're not going to get it back. But what they have decided to do is, well, we need it back because we need to pay the people who are withdrawing. So what have they done? They're trying to get people to buy someone's uncollateralized loan at a 20% APY. Which is crazy. They're turning his debt into a token and then selling it to people. And they've even said, you have to be a sophisticated investor, which, means you have a certain amount of money invested, you have X amount of experience or money or whatever. I don't think you need to be a sophisticated investor to see that this is probably not a good idea. It's absolutely unbelievable, especially when yield services are in such a bad way at the moment, and confidence is at an all-time low. Yeah, I don't think I would be moving into that, if I'm honest. But he goes on to say they also pitch a pivot into a new model with increased transparency, pseudonymous backing, tracking, and public liquidation points. Little do they know, they just accidentally reinvented DeFi. So they think they're doing something absolutely super sophisticated, but unfortunately, they're not, which is not great. But anyway, I mean, we're seeing too much kind of, there's too many disasters going on in the world, kind of fundamentally, on the crypto world anyway.
Yeah.
But yeah, it's just not a great time at the moment. A lot of stuff going on. And I suppose we should probably get into some of the technicals now here, shouldn't we, AJ?
Yeah, just going back slightly a little bit. Esteban asked, what's your opinion on BUSD? Do you think Binance has what it takes to back up the money?
Okay, yeah. I thought you were reading the question, so you yeah. Do I think they have the money?
Yeah.
Yes. I haven't looked at their most recent kind of financial statements, but they are not publicly listed companies, so they don't have to produce them, not make them public anyway. So it's hard to know, but you know, when you consider all of the rest of the crypto market is, like I said earlier, reducing the amount of staff, reducing the services they offer, and I think, you know, then just generally cutting costs in almost every direction. Whereas Binance is saying, look, you know, we can actually afford to keep hiring, and we can have zero fees on our trading because we didn't do advertising. We didn't have loads of celebrities. We haven't gone and bloody renamed a football stadium. You know, like renamed it to Binance Stadium or whatever. You know, they're saving hundreds of millions of dollars, you know, in the process of doing this. So I do think they have more liquidity than almost any other exchange at the moment. Maybe not FTX, because I know they raised loads of money, but that's so that they can buy, you know, essentially their competitors.
Yeah, and it's like what I said at the start, you know, Binance is already the biggest exchange out there. So spending money on all of this advertisement, it's not really needed for them. And as you said, you know, they're saving a lot of money. So personally, for me, I do think they do have the money to back it up. And yeah, sort of. Do you want to jump into the charts quick? Should we have a quick look into the charts? Yeah. So just quickly, I want to show you the NASDAQ chart. So the NASDAQ chart, as of right now, yesterday we did get a red candle on that resistance level. Now, this is sort of one confirmation for me that we could see a rejection here. For a full confirmation, I would like to see another that second red candle from this rejection from this resistance level for me to be confirmed, for that confirmation for me that we are going to get that rejection from this level here. So as of right now, you know, we are still testing that resistance level here. If we do break above it, I think the whole crypto market in general is going to see, you know, a nice move towards the upside. However, if we do see a rejection here, the likelihood of it, and I'm sure you can agree here, Ben, is we are going to see more downside for Bitcoin. And I do still believe that there is another leg down for Bitcoin. And, you know, I've showed you why I think that multiple times in previous streams. Moving on quickly, looking at the dominance is still decreasing. I did tell you a few streams ago, if we did see a rejection from this level here, the likelihood of it is we were going to come down and test this support here. If we do get that breakout on the NASDAQ and we do see the whole, you know, crypto market have that slight pump to the upside, then I do anticipate the alts to do a little bit better than Bitcoin, to recover a little bit better, because they already are recovering a lot better than Bitcoin are. So I will expect to see the percentage come all the way down to this major support level here. If we do get that rejection on the NASDAQ, then I do think the crypto market is going to continue to go down. And that's when I think we would see a reversal on the dominance coming up and testing that resistance level again. Ultimately, in the future, I do believe we're going to break this major support level along here. Do you think we're going to break this support level in the future? I think, you know,
I think it's going to take a while. So, I mean, maybe like the timeline on this would be a bit longer. But yeah, you know, I think obviously when we have the market pump, you know, Bitcoin dominance will increase because Bitcoin's going to, you know, pump usually first and quite hard. But then afterwards, because all of the altcoins, they will pump harder than Bitcoin, obviously, because they have much smaller market cap. So all of those together, I think that will then begin to bring the Bitcoin dominance to, to the downside. But that will happen in a market that we're happy with, because our altcoins will be pumping very hard.
Yeah. And just to answer this question here, do you guys think the 4th of July extended weekend will see more downturn for crypto? For me, I don't think there's just going to be no volume. I don't think, we'll most likely trade sideways. I wouldn't say that we're going to, have a pretty big downturn for crypto. I would just say, we would consolidate over that period. So that's what I think. Looking at Bitcoin quick, it's not, looking too exciting Bitcoin as of right now. We did break out of this triangle that I told you about, and we came into this major resistance level here. We got that false break, and we did come back down, testing that resistance again, getting rejected from the resistance. And as of right now, we are just having, a slight bit of consolidation on that 4 hour. That 4 hour chart, and it looks like that Bitcoin does want to come back up and test that resistance level. This is a very, very important resistance level on the shorter time frame, because we are struggling so much to break above it. Again, with this upwards trending diagonal line as well, you can see that we are still finding resistance on this level. We were using it as support, and now we have broken below it. We have, found resistance along this level twice. Initially, we have found that rejection, and we are seeing a slight pullback. But as of right now, it looks like Bitcoin wants to try and test this resistance level again. If we look at the indicators, we can see that they are sort of in that oversold vicinity. So there is room for us to come back up and test this, maybe even break it. I will be keeping you updated on that. Looking at Ethereum, again, we have just been consolidating. Really on the Ethereum chart, you can see that we did break above this this previous resistance level here, and that was in fact a head and shoulders pattern as well. Broke to the upside, broke up against this white resistance level here as well. Came up to this resistance level here. You can see previous resistance, lots of resistance there. Got that false break, then the rejection, and then we came back to this previous resistance level here, which is obviously going to act as support. Now, found support there, and it looks like Ethereum wants to come and test that resistance. Again, if we can break that and hold that as support, because we've got a false break here, so this is why we didn't come and meet the target up here. But if we do break this level, hold it as support, then I think Ethereum can come and recover all the way up to around $1,400. But yeah, as I said, there's just nothing too exciting happening as of right now. We are just seeing that consolidation here between this resistance and support level.
Can I add something in there, AJ?
Yeah.
Is obviously we're pretty much just seeing a little bit of range trading, not very much happening, low volume, and again I think we'll see that over the weekend, like you said, Gaurav. But on Wednesday we have the GDP print of the US, so this is going to be again something that if the GDP print comes in very high, then we're going to say, okay, the economy is doing really well. That's not good because inflation's high. We need to make the economy worse, basically. So finding out exactly what that would be, that will give people even just an inkling of what the Fed might do and how they will react to that print coming in either higher than expected, which, like I said, if it is, it's going to be bad for the markets. I know it's weird because you think, oh, well, good GDP, that means strong markets, etc. So I think we might see specific companies maybe jump on this, but I'm going to say overall for the markets, it's going to lead us to think, okay, well, GDP is high, economy is doing really well, the Fed's going to have to react very badly, in terms of the markets, i.e., squeeze everything, and so that's then going to bring the markets down. That would be just my thought to something you need to think about when we see that coming out on Wednesday.
Yeah, and it's like what we mentioned in yesterday's stream as well about Jerome Powell. He wants to bring down the housing market because that's up, around 37%. He wants to sort of reset that because he was saying that first-time buyers, they just can't afford
You can't buy
their first house. So
I saw this thing. It was like 19. I'm gonna say 1975. Don't quote me on the years, guys. But 1975, the average income was $10,000 a year,
wow.
and the average house price was something like $40,000 a year in the US.
Yeah,
Now the average income, I think it wasn't average, but it was median. The median income is like something like 50,000, but the median house price is 420,000.
yeah,
So like the amount of or the percentage difference is absolutely insane. But also you've got the cost of living being so much more expensive now. So even if you're earning a lot more money, it doesn't go as far, and so that just makes it extremely hard, for the average person to be able to buy a house.
yeah.
But yeah, we're going off topic here.
Yeah,
All the
so
crypto guys are like, wait, what? Why are you talking about housing?
but
Oh,
it does all sort of factor into the crypto market as well, because as
oh
we
yeah.
know, the crypto market is highly correlated with the traditional market. So yeah, just quickly, Solana, we have broken out. I did mention this a few streams ago as well. We did break out of this channel. Then we did break out of this resistance level here, which was previous support, pretty major support as well. And we've broken above that. And as of right now, we are getting a slight bounce off of that previous resistance, which is previous support and is now support as well. We are seeing a nice little bounce off of that level. That's good. If we do, come back up, test this resistance level up here, this is, previous support. We have had, a slight false break here, but previous resistance as well. If we can get break above here, use that as support, then I think, the next level we can look at is sort of that $58 level. But, it all depends on what the NASDAQ does, and then it depends what Bitcoin does. Right now, for me, I'm sort of just sitting back and just waiting to see what happens with this NASDAQ, because if we do break to the upside, then I think a lot more upside for the whole general crypto market is going to be in play. But if we get that rejection, then I think there's going to be that second leg down for the whole crypto market, which will then potentially take us to sort of my target of around $15,500. Because if we did get rejection here, then what I'll be looking for in the NASDAQ is to come all the way down here and create a new low. So that that's ultimately going to be bad for the whole traditional market and the crypto market. But then it's giving us another lower high for me to flip bullish on. Because previously, for me to flip bullish now, we need to sort of break this $13,000 level on the NASDAQ. But if we can pull back down here, create another low, and then we have this around $12,000 level on the NASDAQ to break above, to sort of flip bullish, because we're breaking this lower high and lower low trend, which you can see very clearly here on the NASDAQ. So that will be quite good news if we can get that next leg down, and then we have a lower price to flip bullish on, because it just means that we can enter into positions earlier and just maximize our gains. So that's what I'll be looking for.
Yeah, no, I agree with you. And I think, one thing just to kind of keep in mind, guys, is there's going to be two different ways that we should play the market. I think getting into a position now and expecting there to be zero more downside is a bad idea. I think especially if you're going to be a trader, that's absolutely fine. And, you should identify those key levels just like we do here every day. But if it is you're looking to invest long term and you want to find out, okay, well, when are we pumping? And if we're going to pump, how hard? But are we going to pump to 50K, 60K? Are we going to go all-time high? You have to think about the timeline that's associated with that, because yes, in general, we're very close to a bottom. I don't think we've found it. So going long now and expecting results within the next 2 weeks is a bad idea, unfortunately. That is one thing I will say. But if you're happy to hold it and you don't necessarily need the money, then yes, for me, it's a great time to be in the market. But just kind of keep that in mind. I've said this for a while. I'm kind of anticipating maybe by the end of the year to start seeing, a serious pump. But unfortunately, that's still 6 months away. Maybe 5 months, in my opinion. It could be wrong, but I'm going to say 5 months is kind of my period for for actually seeing a big pump, just because of the different things I've spoken about on the channel.
Yeah, there was something that I was trying to look at. Maybe it's on here actually. I was trying to look for something I was looking at earlier, and I've just completely forgotten to bring it up. But basically, it compares the 2018 bear market to the current bear market, and I'm not fully aware of all the numbers, but at the moment we have been in this bear market for sort of 7 months, I think it said, and the previous bear market, well, the 2018 bear market was lasted for maybe 18 months. So you can see that we still have sort of a lot of time potentially in this bear market. And this, I showed you this, I think 2 or 3 streams ago, this pi cycle bottom indicator. This gives us a pretty good indicator as well. This is the blue line is the SMA and the red line is the EMA. And every time they cross bearish, it does signal a bottom for Bitcoin. That happened in 2015, and that also happened in 2018, 2019. We flipped bearish, and we established that bottom. Then we consolidated whilst the SMA was above the EMA. But then once we flipped bullish again, that is when the whole market started to recover, and then we got that the bull market. Sorry. So I am expecting to see a little bit more downside, because as you can see right now, we haven't even flipped. We haven't even flipped bearish yet, and we know that we're in a bear market. The past 2 bear markets we have flipped, so I am expecting this to flip. So I am expecting a little bit more downside. So once this flips, I'm going to be happy that the bottom is in. Then I'm going to expect a long period of consolidation.
That's about 18 months there, isn't it?
Yeah.
January 15 to, you see January 16 there, but obviously that's where it's peaked again. So that's about 18 months. And then in January 19, you see the other blue, thing. Maybe it's just January's. Maybe the crypto market
is about 6, 7, 8 months.
Yeah, that's 6 or 7 months. And like you said, we haven't even flipped bullish yet, bearish, sorry. So, it might be that, the last one was 18 months. This one's 6 months. The next one could be maybe 3 or 4. But, we still have to kind of associate the fact that we haven't even, by this metric, started the full duration of the bull market yet. So just, I'm personally just accumulating as much as possible. And that's the only thing that I think, we can say that we feel is a good idea for us to do.
But the bottom is coming. I just don't think it's in yet. And then I think we're going to go through that stage of just consolidation, and that's just a great time to accumulate. But once this flips bullish again, that's when we can sort of confirm that the bull market is starting again. But I don't think it's going to be till sort of later on this year. I think. Like you said, towards the end of the year, I think that's when we're going to start seeing sort of the price increase again. So it's just a waiting game now.
No, I absolutely agree. Just want to quickly answer this one by Esteban. What's your opinion on the big fat short on Tether? Go with the whales, not against them. So obviously that's in reference to what we said earlier with regards to Tether CTO responding to a New York Journal report that big institutions, or Wall Street Journal, not New York Journal, big institutions are actually shorting Tether itself, or USDT. I don't know. I think I would say if they are going to short, it's going to go 2 ways. If they're successful, the whole crypto market is absolutely ruined, and therefore then that's the place, the time to get in. But I mean, if they are successful, this is such a ridiculously disruptive time in the market that a lot of your investments will go down significantly, maybe even to zero. I don't think I can imagine USDT, that happening to USDT. Like I said, if it does, that's when you want to buy afterwards. But I think it's going to be very hard for them to successfully short Tether and cause it to depeg significantly such that there's a crash. Even though Tether are not the most transparent, and I don't believe them, I don't know if yet they will be successful.
Yeah. We'll have to see what happens there, won't we? This our HODL chart also shows that we are quickly approaching the bottom. Are you talking about the chart that I just showed, or is it one that you're looking at?
I believe he is, because that came up like a minute ago when we had yours.
It does show that we are quick, if I just pull it up again and show you, get rid of this. You can see that when we did, cross over, we did have a very, very, you can call it a falling knife. A very sharp, pullback, and then it very, very quickly got bought up, and then the consolidation happens. You can see the past 2 times this has happened. Very quick pullback. And then that gets bought up, and then we see the consolidation. So yes, we are seeing that right now. That very, very quick pullback. We could see just one last little pullback, and then
that could be the wick to 15,000, or maybe wherever the kind of final bottom is, before we then see that spike again. People buying, consolidation and accumulation, and then boom, movement to the upside.
Yeah. So as I said earlier, it's just a waiting game now. Accumulate, and every all these people that don't sort of understand the crypto market are calling it dead. I know a family friend of mine was speaking to someone who used to work for I can't remember, Goldman Sachs, I think they said it was, and he apparently he was telling her that Bitcoin's dead, Bitcoin's going to zero, and all that. And when you start hearing people like that saying those things, that's when a bottom is very close. So things like that get me excited.
I saw was it Jim Cramer? Jim Cramer said, "Oh, I'm feeling good about the crypto market," and everyone was like, "All right, well, it's dead." He's got his Jim Cramer inverse ETF. known very popularly in traditional finance of being completely wrong about everything all of the time. But he has his own show on CNBC for some reason. But yeah, no, I just think there's a lot of FUD, and it's been proven before. I'd actually really like to find it, because I went through this study once, and it said about every time that JP Morgan was actually saying to their clients, this is a worry, every time they were doing this, then we had an inverse. It was just showed that they were buying so much of the infrastructure, buying so many coins that, during these periods, even though they're saying, hey, everyone listen to us. And I think that is kind of a systemic problem, because these guys don't like crypto because people are doing stuff without them, and they're losing their shareholder, or I should say their market share to crypto companies. So they either want to destroy them, invest in them, and then profit from them, or destroy them and do something similar themselves. I think one of the biggest investors in Consensus, which is the number one developer on Ethereum, is owned by JP Morgan. Not all of it, but a lot of traditional finance companies are investing in it because they know it's going to be massive. But they also don't want to say that, so they keep it quiet. But anyway. Should we wrap it up there, AJ? Come back to these guys tomorrow.
So thank you very much for watching, everyone. Make sure you head over to the Twitter. The Twitter will be linked below. I'll also put the banner up there for you. Make sure you go and follow us on Twitter. We will, keep you updated on charts and sort of news stuff that happens. So make sure you follow us over there. If you enjoyed the video, please smash that like button. Subscribe as well if you are new. And thank you very much for watching.
Damn right. See you tomorrow. Take care, guys.
Take care.
All the best.